Hey traders, welcome back to the channel. In this video, we're going to talk about the Ashford Hospitality Trust, ticker symbol AHT. After an absolutely incredible week, our bullish thesis is starting to come to fruition with the reopening and with this travel demand surge. We are starting to see the price action follow suit. So this is really, really good. But in this video, we're going to look to the future, okay? I've had a lot of people ask me about price targets for the stock and whether we're going to return to pre-pandemic levels. So I'm going to break that down for you guys. And then we're going to take a look at the chart, breaking down key levels and key indicators so we know what to expect moving forward. Without any further ado, let's get right into the video. Okay, so really quickly, before we get started, I just want to thank everybody for the love and support so far. We did break 100 subscribers last week, meaning that this Tuesday during regular market hours, I will be doing a live stream where I answer your guys' questions. I will break down any charts that you're currently playing, and I will also be showing you guys my process for day trading. So make sure to have your notifications on. And if you haven't subscribed to the channel already, make sure to do that. You won't want to miss this. But without wasting any more time, let's get right into this analysis. Okay, so there's a couple of things we have to keep in mind when taking a look at AHT stock and evaluating potential price targets. The first thing is the future outlook for the company. And I personally am very, very bullish on this. Okay, we referenced this article on Monday's video, but I specifically want to point this out again, that when we take a look at trips planned for this summer with the travel boom that we're expecting, the vast majority of people are staying domestic, okay? 87% of people that have planned trips are staying domestic, and that could be absolutely game-changing for AHT because, as we all know, their hotel holdings are all based in the United States. And when we take a look at the sheer number of international travelers, we can really start to see these impacts laid out, okay? In 2019, the U.S. Commerce Department's National Travel and Tourism Office noted that the number of U.S. citizens traveling outside the country was 93 million, okay? Now, let's say that, a half or a third of this 93 million people decide to travel instead into the US this summer because they're still a little hesitant to fully go back out there. We're not fully out of this pandemic yet. Well, all of a sudden, we could see an additional 30 to 50 million trips domestically, and that could be monumental for AHT's revenue. We saw AHT's revenue being around 1.4 to 1.5 billion dollars before the pandemic. However, now if we have an additional 30 million to 50 million trips, well, then we can kind of conservatively say that we should see that AHT hotels get a revenue bump of at least 100 million, more than likely like 150 to 200 million. So that would represent a 10% increase in the revenue for this company, meaning that we should see a price action increase of 10% as well when we're laying out our price targets. However, since the pandemic happened, we've also seen a lot of dilution in the stock, specifically pointing out that before the pandemic, at the end of 2019, there were 32.7 million shares outstanding. And by the end of 2020, that number had risen to 66.53 million, which is pretty monumental. However, keep in mind that in 2021, there has been additional dilution, and now the public float sits at 137.85 million, meaning that that pre-pandemic float has been diluted over 4 times. And on top of that, there are still an additional 30 million shares that AHT has the ability to dilute. And for the sake of this video, being conservative with the price targets, I'm going to assume that they are planning on doing so. They have a history of diluting the shares, so I would expect them to dilute those shares to Keystone, meaning that the public float's going to sit around 160 million, which is about 5 times higher than the levels it was pre-pandemic in the later half of 2019. And taking a look at the chart, taking a look at what we were seeing before the pandemic in the second half of 2019, we were sitting in this $20 to $35 range, okay? But now, since the float has been diluted by about 5 times, This $35 number that we were seeing back then would be worth about $7 today. And this $20 number would be worth about $4 today. So that's something to keep in mind. We have to adjust our targets accordingly. But when we also keep in mind that we are expecting to see that AHT outperforms 2019 due to this travel demand surge, we can start to expect to see numbers that are higher than what this 35 level would have been. Specifically, I said that we could use 10% as a conservative estimate that will price in this travel demand surge, meaning that when we saw the peaks right here around $35 in September of 2019, we can expect that to go to about $38. And our price target adjusted accordingly, divided by 5, would be about 730 to 750 as kind of your top zone here. And I marked this with the yellow line, and I think that that's something that we're going to have to abide by. Okay, based off of fundamentals alone, this stock should not be going higher than, this 730 to 750, 770 range. If it does go higher, it would be due to technical factors such as a squeeze, which is definitely possible here. We could definitely see it go to $10 or even further than that. However, if that does happen, don't expect that to be sustained. Okay, it's very, very dangerous at that level, and make sure to take your profits. For this to go to $20 would be absolutely absurd, though, at these current levels, because that would mean that back when it was, $20 to $35, if it had the same share float that it does today, well, then this stock would have been worth like $100 to $150 back then. So that is a very, very aggressive price target. I'm not saying that it can't go back to $20, but there would have to be some monumental steps, in my opinion, in order to make that happen. But as a conservative top of the line price target, I definitely think 730 to 770 is possible. Anything after that, you're starting to get out of the fundamental range. You're probably going to get a little overextended, and you should kind of be quick to take profits in that instance. However, we still do have a long way to go until then. We're sitting at $4 currently. And if this thing does go to, 750 or so, well, that represents an almost 100% move. So there is still a lot of room left here to run. My first personal price target still sits at this $5 marker. That's where I'm planning on starting to initially take my profits. But let's get more into this chart now and start taking a look at the price action and the indicators we saw last week. So on Friday, we did see us kind of jump out into this breakout zone, where I did say that if we get above 420, we should have a clear path to 480s. Unfortunately, with the market conditions and the fact that, this stock ran about 30-40% over the course of the week, we got a little overextended and we couldn't really get this clean break. Okay. And also volume was dying out with Memorial Day weekend right around the corner. And eventually we broke back under this support. And then we actually broke under $4. But I mean, at that point, a lot of buyers stepped in. The interest was there, and we just kind of started oscillating between this $4 to $4.20 range, ultimately closing at $4.05. So we're sitting pretty good heading into next week. Taking a look at the indicators, we did close under the VWAP. That's this yellow line right here. That means that the bears are in control heading into Tuesday's trading session. However, take this with a grain of salt. Friday was a weird day, of course, going into the long weekend. However, other indicators to keep in mind. So we do have this 21-day EMA sitting right here at 315. I use this moving average to evaluate whether we're in bullish or bearish territory in the short to intermediate term. And as you guys can see, we are well above it after this week. We broke above it this week. And as a result, we are sitting in very, very bullish territory in the short to intermediate term. We are also sitting in bullish territory in the intermediate to long term, specifically taking a look at this little blue and orange line right here at 274 and 273. Those represent the 50-day moving average and the 200-day moving average. I'd use these lines and moving averages to tell us whether we are in bullish territory in the intermediate to long term. And because we are indeed well above these levels, things look very bullish in pretty much any time frame for this stock. And the last thing to take a look at is this OBV. I talked about it in earlier videos this week, talking about how we're approaching all-time high levels. And we did see a slight pullback on Friday, but as you guys can see, I mean, ultimately, we are still sitting in this all-time high range. Big money and volume buying is still very, very much interested in this stock. They're not massively selling off. There's no worries there. And so things are still looking very, very good for AHT to keep its run alive. But now taking a look back at the 1 minute at support and resistance levels. So heading into Tuesday's trading session, the first support level we're going to see is this $4 marker. That's a key psychological number. And I mean, you saw pretty much what happened on Friday when we dipped under it. The buying started flowing in and we broke back up pretty much immediately. And then we held that as support for the rest of the day. So it's a good sign. And we'd like to see that continue to hold if we want to make that next leg up to $5 next week. If it does break below, we also do have support at 375 and 365. After that, we would break down to this 340 to 320 zone. So keep those levels in mind. You know, I'm not saying that we're going to retest them. However, if we do, that creates a very, very good buying opportunity because you end up minimizing your risk and maximizing your reward. Let's say that on Friday, you were paying attention to the charts. You saw that it hit this level of like 383, and that's right next to the support. So you decided to scale in a little bit. Well, ultimately, this support did end up kind of wielding off any more downward pressure, and you would have made yourself a good chunk of change. Keep those support levels in mind. But now moving on to the resistance side of things, we're going to see resistance at 420. Like I mentioned, you know, we did get this initial break on Friday, but after that, it ended up being pretty significant resistance. After that, we have room to run to 466 before any real resistance. And then after that, clean skies to my first price target of $5. Now, another thing to keep in mind here is the volume. If we do want to see AHT make that next leg up next week, expect to see the volume continue to be in this 30 to 40 to 50 million range. That's what we want. If the volume does break under that, we can expect to see some low volume consolidation or even some downside ahead. So that's another important factor to pay attention to. However, let me know what you think is going to happen next week. Are we going to make that next leg up, or do you think we have more downside ahead? And what are your price targets for this stock? Let me know. I'm very interested to hear your feedback. And aside from that, leave a thumbs up on the video, subscribe to the channel, and have a great rest of your weekend.